You ever feel like no matter how much money you save, buying a house just keeps getting further away? It's not just the prices, it's something way deeper. There's a silent rule in the housing market that most people don't even know exists. And it's designed to keep you renting forever. You've done everything right, you got a job, you saved money, you even cut back on small things like coffee or streaming subscriptions. But when you finally check home listings, the prices look like monopoly money. The dream of owning a home feels like it's slipping away, right? Well, it's not just bad luck. There's an invisible system, one that's been shaping who gets to buy property and who doesn't for decades. It's not a conspiracy theory, it's just how the modern financial system works, quietly, in the background. And today, we're breaking it down. Why the system keeps making homes unaffordable, who benefits from it, and how you can actually outsmart it before it's too late. Let's start with the basic question. Why does it feel impossible to buy a home anymore? It's easy to blame inflation or greedy sellers, but the real reason goes much deeper. The truth is, we've entered a new financial era, one where home prices are not based on how much you can afford, but on how much investors can. See, decades ago, the housing market used to revolve around people buying homes to live in them. It was simple, you worked, saved up, and got a mortgage you could pay off over time. But now, houses aren't just homes, they're assets, investments, and the people buying them are often not families, but corporations, hedge funds, and institutional investors. Here's the silent rule. The value of a house will always rise to match what investors are willing to pay, not what families can afford. And once you understand that, everything about the housing crisis starts to make sense. Let's go back in time for a second. After the 2008 financial crash, the government and banks wanted to prevent another meltdown, so they made borrowing cheaper. Interest rates dropped to near zero. It sounded like a good thing. Lower interest rates meant cheaper mortgages, right? At first, yes. People rushed to buy homes because they could afford bigger loans. But that rush created demand. More demand meant higher prices. And higher prices meant homes started becoming less about shelter and more about a way to store or grow wealth. That's when the big players stepped in. Companies like BlackRock, Invitation Homes, and other massive funds started buying entire neighborhoods. They didn't need mortgages, they had cash. While the average person was struggling to scrape together a down payment, these corporations were buying hundreds of homes at once, sight unseen. And here's the twisted part. The banks loved it, because big investors rarely default. It's less risky. So, guess who the banks prefer lending to? Not you, them. This is how the silent rule works in practice. Every time prices rise, instead of the market correcting itself, new money enters from people or institutions who can afford to pay even more. That keeps the cycle going permanently. But it's not just corporations. There's another layer to this problem: the invisible influence of debt. Mortgages are not just loans. They're financial products that banks and investors trade. When you take out a mortgage, that debt can be packaged up, sold, and turned into a product that earns money for someone else. So the more expensive homes become, the bigger those loans get, and the more profit is made from selling them. That means there's actually incentive for the system to keep home prices high. The higher the house price, the bigger the mortgage, the more interest over time, and the more valuable those mortgage-backed products become. And who ends up losing? Regular people. People who are told, just keep saving, just work harder, just wait for the market to cool down. But the truth is, the market isn't meant to cool down. It's designed to keep rising. Let's look at an example. Imagine you find a home listed for $400,000. You think, if I save $40,000 for a down payment, maybe I can afford this. But a real estate investor sees that same home as a rental property. They can borrow money at low interest rates, put less down, and rent it out for profit. If they can make $2,500 per month in rent, that house isn't worth $400K to them, it's worth whatever price allows them to make that return. So they offer $450K. Then another investor comes in and offers $475K. Before you know it, the home is gone and the market price for the neighborhood just went up. You never stood a chance. That's the silent rule in action. It's not that you're bad with money, it's that you're competing in a game that's been rewritten. But wait, it gets even worse. There's another silent rule nobody talks about. The more money printed by governments, the higher asset prices go, and that includes houses. Every time there's a crisis, central banks flood the economy with new money to keep things stable. But that new money doesn't just sit in your bank account, it flows into assets, stocks, real estate, crypto, you name it. So, when the government prints trillions of dollars to stimulate the economy, guess who actually benefits? People who already own assets, not the people who are trying to buy them. And once again, housing prices climb even higher, because that's where the money goes. Let's pause here. Think about this. In 1990, the average home price in the US was around $120,000. In 2024, it's over $420,000. Did wages grow by that much? No. Wages barely doubled, while home prices tripled or quadrupled. So, when you feel like you're falling behind, it's not your imagination. You're playing in a system that rewards ownership and punishes effort. That's the silent rule. Wealth doesn't come from working harder, it comes from owning assets. And housing? That's the biggest asset class of them all. Now, here's the kicker. The people who control the housing supply, governments, developers, and big investors, all have a reason to keep prices high. Governments want higher home prices because it means more property taxes. Developers want them high because it means bigger profits per project. Banks want them high because it means bigger loans, which means more interest. No one in that chain benefits from making homes cheaper. So when people say, "Why doesn't the government just build more affordable housing?" the answer is simple. They could, but it would hurt the people and institutions that actually fund political campaigns and hold financial power. That's why the rule stays silent. Here's the uncomfortable truth. The system isn't broken. It's working exactly as intended. It's designed to keep the rich rich and to make homeownership something you aspire to rather than something you achieve. But that doesn't mean you're powerless. You just need to play the game differently. If you can't afford to buy a house right now, that doesn't mean you should give up. It means you should shift focus from saving for a home to investing toward one. Think of it like this. If home prices rise faster than you can save, then saving alone will never catch up. But if you can grow your money faster through investing in index funds, real estate REITs, or even small side businesses, you can actually ride the same wave that's pricing everyone else out. The people who end up buying homes later aren't necessarily the ones who saved the most. They're the ones who grew their money outside the housing market first. This is how you flip the silent rule on its head. You don't need to beat the system, you just need to understand its logic and use it in your favor. Here's a simple truth that nobody tells you. Housing markets move in cycles. There are boom phases and correction phases. The rich don't buy homes at random, they wait for the dips. So instead of feeling like you failed because you're renting, focus on positioning yourself for that moment. Build cash flow, grow your investments, keep your credit strong. Because when the next dip hits, and it will, you'll have power, you'll have liquidity, and you'll be ready while everyone else is panicking. That's how the wealthy think. They don't wait for permission to buy, they wait for opportunity. So let's sum this up in plain words. You can't afford a house right now not because you're lazy, not because you didn't save enough, and not because you made bad choices. It's because the system was quietly redesigned to value investment potential over human need. The silent rule is simple. Homes are worth whatever investors can pay, not what people can afford. And once you see that, you realize the system isn't against you personally, it's just blind. It rewards money with more money, but you can still win if you learn to move your money differently. Save less, invest smarter, focus on growing wealth, not chasing prices. Because when the next correction comes, the people who understand the rule won't get crushed by it, they'll use it. And that's when you'll finally be able to say, "Yeah, I bought my first house."